Let's speak about Chargepoint, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor. And do we have a video for you guys today? Grab yourself a drink, grab yourself a snack, do whatever you want, strap yourselves in. There is a lot of information to unfold here. So, you're all probably aware that Chargepoint's earnings came out there recently, and there was a very good response. They were up as much as, I believe, 17% on the day. On a day where most EV was in the red and any that were in the green was 1% or so, and the majority of the market was red as well. So it's quite clear to me to be able to say that the reason Chargepoint stock went up in value was because of a fantastic earnings report, which is amazing to be able to say. Now guys, you'll see in front of me I have a Google Doc open, and what I've done here is I've essentially just consolidated all of the important points from the press release just to be able to go through it really quickly. What I've also done is consolidated the Q&A portion, okay? Because if we look at the earnings call transcript, you will see that there is a lot. There is a lot going on, but inside of this is where all of the juicy information is. So what I've gone through is, and I've taken out all of the most important questions and answers. I have cut out some of the, not as important bits. I've also made it more eligible because since it is word for word on a live call, sometimes they're stuttering, etc. So I've just put it in a much easier to absorb way here. This is why this video is taking me a bit longer to come out. This is why I wasn't able to get the video out yesterday, because I'm not joking you when I said I listened to the earnings call twice and I've read through this 2 or 3 times trying to get all this information out. And my head felt like it was going to explode last night. I couldn't record the video. I had to lie down. So with that being said, could I please ask you to hit that juicy like button? Again, a lot of work went into this one, so I really would appreciate it. If you are new around here, please hit that juicy red subscribe button. Join the family of investors. And drop me a comment down below. Let me know what you thought about Chargepoint's earnings. So again, with that being said, I have all of this consolidated information here, and that's pretty much what we're going to be going through today. One thing just before we get into that is also this. Chargepoint CEO was appointed by President Biden to the National Infrastructure Advisory Council. The council advises the President of the United States on how to reduce physical and cyber risks and improve the security and resilience of the nation's critical infrastructure sectors. I mean, I don't think you need anybody to tell you why that is a good thing just from reading that headline alone. Happy days. Now, second quarter fiscal 23 revenue of $108 million exceeded top end of quarterly guidance. So they actually exceeded their top end numbers. That's why people are so happy. And this is the first time they had over $100 million revenue in a quarter in their entire history. So it is happy days. Revenue grew 93% year over year as the company posted its first $100 million quarter. Revenue was up 93% from $56.1 million the same year's prior quarter. So I mean, look, goes without saying, that's absolutely fantastic. One thing I put a lot of emphasis on in my last couple of Chargepoint videos was not EPS, but it was revenue and it was gross margins. GAAP and non-GAAP gross margin improved 2 percentage points quarter over quarter. So again, obviously, what we want to see. I was pointing out that I don't like this trend whatsoever here. We saw what happened to Xpeng when margins dropped where we didn't want them to drop, and now we see the climb back upwards. And the CEO and CFO had a lot to say about this on the earnings call, which we will, of course, be getting into all of that juicy information for you guys. Non-GAAP pre-tax net loss in the second quarter was $62.3 million compared to $40.3 million in the prior year same quarter. So obviously, net loss has gone up. In regards to liquidity, which is something we need to be very conscious of, especially while we are still posting losses. As of July 31st, 2022, cash and short-term investments on the balance sheet were at $471.9 million. So enough to cover 3 quarters to come still without any additional raise. Expecting the loss to stay the same. We can probably expect it to go up. We will talk about why later on, but it is not for bad reasons. It is indeed for good reasons. And incredibly, Chargepoint guides to third quarter fiscal 2023 revenue of $125 to $135 million. Okay, just keep in mind this was their first quarter ever over $100 million, and they're still looking for that 25 to 35% essentially revenue growth. And they confirmed full year revenue guidance of $450 to $500 million, meaning they are setting up for a juicy next 2 quarters altogether. Okay, so for full fiscal year and in January 31st, 2023. Chargepoint continues to expect, again, they're not having to lower their guidance as we've seen so many EV companies, and let's be honest, so many companies across the world do. Revenue of 450 to 500 million. At the midpoint, this represents an anticipated increase of 96% as compared to the prior year, and a non-GAAP gross margin of 22 to 26%. Keep these numbers in mind. We're going to speak about them. I think it was Craig Irwin who asked about these. We're going to speak all about this later on and see how we plan to get there. And non-GAAP operating expenses of 350 to 370 million dollars. Okay, so OPEX is up there, but we have the liquidity for it for the time being at the very least. At the midpoint, this is an anticipated increase of 50% as compared to the prior year. Okay, so that's the basics of it. That is what the main things from the actual earnings report have to say, and overall very, very good. It's clear to see why Chargepoint went up in value quite aggressively. It also is still respecting our technicals. You would have made an easy 20%, 15-20% if you respected the technicals, but anyway, we're not going to even speak about that. Fantastic quarter. Now, that's the basics of it. Where all the juice was hidden away was this wall of text. This wall of text is where all the juice is, and that is what I have ready for you guys right now. So let's get into the Q&A segment, baby. First, let me have a sip of that coffee, baby. I gotta keep myself ready. So Colin Rush with Oppenheimer. If you guys could comment around any of the indications that any of the NEVI funds, with NEVI is the National Electric Vehicle Infrastructure Funding, are starting to get prepared to come out. Now, just in case any of you guys aren't aware of who NEVI are or what they do, they're the National Electric Vehicle Infrastructure Formula Program. And essentially, they're going to be able to give companies like Chargepoint a lot of money, a lot of incentives, put them in a better position going forwards. Their programs will provide funding to states to strategically deploy electric vehicle charging stations and to establish an interconnected network to facilitate data collection, access, and reliability. Funding is available for up to 80% of eligible project costs, including the acquisition, installation, and network connection of EV charging stations to facilitate data collection, access, and reliability, proper operation and maintenance of EV charging stations, and long-term EV charging station data sharing. Just in case any of you guys weren't really aware of that, that is what that is. So they ask any comment on it. We don't have any expectation there will be any significant flow this year at all. By the way, I didn't put it in, but the answers for this are all going to come from either the CEO Pascal or the CFO Rex Jackson. We don't have any expectation there will be any significant flow this year at all, anything material with respect to NEVI. It's too hard to predict at this point what the state programs will actually manifest in the form of schedule and equipment in the ground next year and for the 4 years thereafter for that kind of 5-year program run duration. So the net of it is we treat it as upside. And I left a little note here just to point out, okay? This is something we'll see throughout the earnings report. There is several times management speaks of upside, which isn't taken into account in regards to the guidance. This makes hitting expectations much easier than over-promising. A big problem with a lot of EV stocks, we've seen it so many times, countless times in the past, big names and small names, over-promising, which leads to huge sell-offs come earnings season. These guys are beating their guidance. Their guidance is things that their customers, their investors are happy with, and there is more upside potential there that they are not even including in their guidance, such as this, such as NEVI funds. If they come through, yet again, we're in a better position. There is more on this coming. So that's the first part of the Q&A. Bill Peterson with JP Morgan. This is a long one. Stick with me. I was hoping you can help us understand what was better in the quarter, what you were able to deliver in excess of what you thought maybe at the beginning of the quarter. And then as it relates to the guidance, are you seeing similar mixed trends sort of kind of lag on a sequential point of view in the second quarter? But how should we think about trends here, I guess, in terms of seasonality? I think everybody knows that generally the last quarter of the year has been good for EV. It's a little bit different with Chargepoint, with their SaaS, etc. But yeah. We had a very nice performance from the commercial vertical that had a nice little recovery. It was the one part of the business that lagged the most, relatively speaking, of course, during the pandemic. If I bring you over to revenue diversity, you will see that, look, network charging systems went up considerably. They only went up a tiny bit the quarter beforehand. We can see that helping out. So very welcome to see that coming back. And then we just had a very nice performance from the operations team to bang the product out. So it was no one thing. We have a nice backlog backing us up as well. Again, something that's going to be prominent in this Q&A section that's going to fill us investors with confidence. So I think this is more of a consistent C-ball game right now until the external environment changes, where we just keep pushing the envelope, but any breakouts that we would expect would be a function of the external weather clearing up considerably from where it is today. So what that really means is there's still all of these external constraints, okay? There's still the supply chain issues. We will speak about that in today's video as well. but it's not on ChargePoint. And if they can keep performing at this level, when things do clear up, things that are outside of their control do clear up, it's only going to be good for the company. Nice to see the sequential improvement in margins and reiteration of full year guidance. Hardware margins stepping up. I guess the software and services step down, at least from a gap point of view. How should we think about the margin? Again, margin is so important right now, guys. I will not stop stressing this fact. I guess, what was the reason for that, and how should we think about the margins in that segment going forward? I presume that's going to be a key factor in driving full year margins to the 22 to 26% range that they put forward at the start. If you look at the quarter, we just finished going from 17 to 19%. Again, you can see that here, non-GAAP non-GAAP gross margin up 17 to 19. Potentially one of the most important slides that came out of everything to do with this earnings report. You can imagine there is a lot of operational grinding out that happens to provide those improvements. And it really comes from a broad base of things that we do. And there is everything from negotiating a given component supply to designing new components that have a lower cost profile. So yeah, it makes sense. That's how we get our margins up. We obviously have new product introductions that are happening as we speak, and being able to just continually work the process to bring down cost and therefore gross margins up on the hardware side is just something we do every day. And I think we have a pretty good start here coming off the 17% from last quarter. From a software perspective, our subscription line obviously includes both software and our assured warranty product. And what most people don't know is that we put our call center costs against our subscription line, which is why the gross margin on that is less than what you would expect from a pure SaaS business. So again, they could manipulate this right now and get that margin up, but that's not what they're doing, because again, they're not over-promising, they're not overextending, they're not creating impossible to reach standards. They are just being open, honest, telling the whole truth with everybody. Stephen Gangaro with Stifle. I was curious if you could talk a little bit about the advertising side and how it sort of fits into your portfolio. And again, if you watched my last video speaking before the earnings came out, I said I would be looking to get word on this as well. Now, it's not necessarily what I thought it was going to be, I'm going to tell you right now. We view it as a way for certain sub-verticals inside of commercials, say certain retailers, shopping malls, etc., to get started with EV charging. And it's one of many ways that they could engage or get started. So we've developed some partnerships around that. It's very complementary from a site where advertising is going to naturally throw off any kind of revenue that is substantial enough to offset the cost of charging, which is a narrow set of applications. We look at it the same way we look at charging as a service, where we bundle the hardware into subscription. Some of the finance models we brought to the market. We just look at it as another optional engagement model that we have and get some very good partners on that side as well. So I'm not really sure if I expect this to necessarily benefit or influence ChargePoint's balance sheet whatsoever in the future. It might. It is hard to know as of right now. But again, this is a brand new thing. I mean, it's barely even in application now. If it's in application at all, I actually don't think it is. I think they said 2023 they want to have upwards of 1,000. Anyway, this is all new. This is new news. So I'm interested to see if they are actually going to, benefit substantially in a monetary way from this, or if it's just going to be, a way of getting more customers. There's a little bit more on advertising later on, okay? James West with Evercore. Obviously, you mentioned vehicle limits at this point. This is an important one. But the vehicles are coming. They are coming next year, and they are going to ramp pretty significantly. And that's going to be a big, chunky piece of your business. So I guess, how are you thinking about your supply chain, your contract manufacturers ramping or expanding your capacity to handle that what's going to be probably a pretty big surge in volume? So a very important question. The increase in volume due to vehicles will still have a ramp profile to it. Important to remember. And remember, we use the same hardware platforms universally, so they use the same commercial and fleet. We're always improving the sophistication of our supply chain and CM base. We, just as a matter of course, with the factories, we control the test infrastructure. We can scale that pretty much at will. So net, I don't see supply chain as the real limiting factor on fleet. I still see it being more vehicle limited. And this is a common theme in this Q&A session as well. The supply chain is going to be okay by the looks of it. From their point of view, at least, it's going to, I'm sure, directly hit some of their consumers, some of the people that they work with, etc. But yeah, a fairly decent answer. Nothing out of the ordinary. Nothing that you wouldn't expect. Nothing groundbreaking. Sip of coffee? Now, more on it. Craig Irwin from Roth Capital, a very well-known analyst, loved and hated by many. I was hoping you could give us a little bit more color, maybe around the supply chain issues that are moving behind you, okay? Demand for electric vehicles exceeds supply by a long margin. If the macro environment for consumer goods begins to hit some rough patches, the vehicle demand is still going to be there on the electric vehicle side, sufficient to basically consume the production capacity of most OEMs. So we should still see growth. So again, when you're looking at this from the point of view of ChargePoint, of charging stations, of their SaaS, they are in a much better position supply chain wise than a lot of these other guys. And just remember that the demand for electric vehicles exceeds supply by a long margin. So their business is going to be there for them regardless. And then one more from Craig Irwin is in regards to headcount additions, so new staff, of which there have been considerable amounts of. Are you looking for engineers, salesmen? What is the hiring focus at ChargePoint right now? So in terms of where the biggest scale pressures are in the company, you can think about our infrastructure as a company that's growing effectively 30% quarter over quarter. Huge. Most companies don't see it in a couple of years. So you can imagine what we're doing internally from a scale perspective. Not only in operations, what support in laying in the infrastructure ahead of needs there. So really, a lot of the infrastructural positions in the company are really getting investment. You love to hear it. It just implies that the growth is going to keep coming internally, vertically. Another thing that we're doing is we're investing heavily in internal business systems and our internal business applications team. With that said, we're still growing R&D, but we preloaded R&D growth over the last 15 years while they were growing, while they were private. It was pretty much just investing in R&D and sales and not a whole lot else before we went public, which is the way, the large majority of private companies do things. You don't go public until you have these things in a very good position. So I'm happy to see this. I'm happy to see all of this going on. It's a great place for our capital to be going. Quick one, Shreyas Patil with Wolf Research. What was the supply chain impact to margin in the quarter? So the impact we're quoting is about $7 million or 6 percentage points in the quarter. I think what's going to happen is growth into Q3 and Q4. Some easing of the supply chain issues that will help us drive gross margin. So again, where are we? If you look at our non-GAAP gross margin, it's at 19%. We would really like to see this in the 22 to 26% range. Taking into account that 6 million, we would be near 21%. They should well be able to hit it, especially again, as they said, if there is some easing of the supply chain issues. So here is hoping. But again, another potentially positive tailwind that is not being taken into account to an extent with guidance. Next question, Matt Somerville with D.A. Davidson. I was hoping you could comment briefly on just overall thoughts on California's law mandated 100% EVs by the middle of the next decade, 2035. There are a bunch of other states that typically follow California. How does this inform or potentially change or accelerate your go-forward strategy? So I thought this was an interesting one because obviously this is something that gets spoke about quite a bit on this channel. It really got spoke about a lot back in 2021 when we first started seeing things like this. But I really like the answer here from the CEO. I don't think it changes our forward strategy at all. And the reason is most or virtually all auto OEMs sell globally. And if you look at what's already been put in place with respect to bans on internal combustion vehicles, 2035 is about the number that's already put in place in a lot of different places around the planet, especially in Europe. A lot of different countries in Europe. Some even earlier. I don't think it really materially changes the adoption rate of electric vehicles. And I like the fact that we're hearing this from ChargePoint CEO, somebody who, obviously could turn this into some big, huge bullish thing. And again, take that into account in forward guidance and sell everyone a dream, but he's not. Consumer demand for electric vehicles exceeds supply. I think I added that in there on my own accord. That might not be a quote, but again, I'm just reiterating the fact. Things like this are good, and it definitely is good, but they're potentially better for certain people who sell the actual vehicles. ChargePoint, not quite as much, but an interesting take nonetheless. We have Kashi Harrison with Piper Sandler. Can you talk about how you are thinking about the impact of the Inflation Reduction Act across your business in light of your discussion around demand above supply capacity? So I made a full video on the IRA relatively recently. It didn't get too many views, but it's full of lots of information. If you guys do want to go check it out, I'll leave it in the corner. You can check it out after this video. But what we like about it is that it has reasonably balanced incentives for both commercial and fleet vehicles, as well as the associated infrastructure. So it's very key for us from a policy shaping perspective to see policies that look at the whole picture in its totality and don't effectively create demand hotspots or incentive hotspots, so to speak. And this one looks like it tried to address that in a reasonable balance. And it's always tough to do that in something as large as a bill like that. So I mean, essentially just saying, it's not just going towards light vehicles or just towards heavy duty vehicles. And he did speak about this a lot more on the earnings call itself, but essentially doesn't think it's the absolute biggest thing in the world yet again, just like the previous question in regards to 100% EVs by 2035, etc. Okay, so standard stuff. But do you expect to be at bottom end of guidance range for OPEX? Now, this one is obviously important. Obviously, we would rather him say yes. He said, we are going to be responsible from a data cash flow positive perspective. And remember, guys, I'm paraphrasing everything that was said. If you want to look at everything, I'll leave the link here in the description. But there is a lot being said. And look at that again. Chargepoint is the only EV stock in this portfolio I have that is in the green, compared to some big names being 4 or 5% in the red. Wow, people truly were happy with this. So they're going to be responsible. And so we are feathering back our operating expense estimates. I would expect to be in the lower half of that range as well for this year. So again, I'll come back down here momentarily. We have that up here. Where were we? Non-GAAP operating expenses of 350 to 370 million. So, you know, hopefully more so on the side of 350 to 360 million is what he is saying here. I believe this was the CFO. So again, a nice answer, one that you're happy to hear, a very responsible, simple, straight, clear answer. A lot of the time in these Q&As, people could ask a question and then they speak for 3 minutes. The question doesn't get answered and the operator puts on the next call. The CEO and CFO have both did a fantastic job throughout the entirety of this Q&A session of actually answering the questions, which means a lot to me as an investor, not running away from the tough questions and also just answering them very clearly and concisely. Ryan Greenwald with Bank of America. So on the IRA again, the Inflation Reduction Act, you alluded a bit to the qualification nuances for the tax credits. At this point, have you seen any customers kind of look to pause any second half solutions previously planned for some clarity and for the tax credit to ultimately take effect? So again, this is something that I wondered myself when I was reading through the IRA. Is this going to make the next quarter or two potentially worse until these tax credits are in effect? And it's really tough to know. But CEO goes on to say, I've got no alarm bells from our sales force of any significance that there is any stall in the marketplace from an IRA perspective. I am sure there is an account here or there that may do that. And of course there is going to be. Some people will do that until they know, exactly what way it's going to work for them. They may have to wait another 3 or 6 months, but they may end up saving some money. But in the law of large numbers, it's not changing our forecast. And I think that sentence is the most important one there. The IRA is not going to affect Chargepoint in a negative light whatsoever, which it's going to affect them long term in a very positive light, but just for the next quarter or two, he's saying it's not going to affect them in a negative light, which it could have done because people could push back certain orders. Christopher Souther with B. Riley. Hardware ASPs. You talked about the increases being really US based. I am curious why we are not also increasing in Europe as well. Now, this was a question and answer that I loved listening to on the call, but he goes on to explain it so simply, yet so fantastically. And again, it just fills you with excitement for the future of Europe. But anyway, in North America, obviously, we have got a great market position here. So there is some elasticity possible in North America. When you go to Europe, we are a relatively recent entrant into the market. Now, so is everybody. It's not just Chargepoint. We are just still relatively far behind of what you will find in North America. It's highly fragmented, as you know. There is a lot of competition over there. There is work to do there to be able to educate the market and bring the overall level of price more in line with what we are accustomed to seeing here. So essentially, what this means to me again is top end could be improved when these hardware ASPs go up in Europe alongside going up in the North of America, basically. So again, this is a thing that he could say 1-2 years down the line it's going to go up and up, but they don't know, and he's not trying to make us believe they know exactly when it's going to happen. It's just a real honest, raw, open answer. It's tougher in Europe right now, which is absolutely fine. Different climates are that way, but they are able to do these things in North America, which is obviously the biggest market by a long shot. They are able to increase hardware ASPs. Now, the last 2 questions I have included from the Q&A. Again, there are a few more in there if you want to read the whole thing for yourself. Itay McKelly with City. I probably butchered that name. I probably butchered at least 5 names today, but it's okay. So for the lower end of the guidance for the gross margin, I just want to make sure that revenue is not included, and that was just for gross margin side. So again, just a clarification, because some of you may have had this question as we've gone on as well. Commentary on gross margin and OPEX was specific to gross margin and OPEX, and there is no shading on the revenue line at all. I am very confident that we have got the Q3 guide and the annual guide there in our gun sight. So again, this is one of the last questions that was asked on it all together, and I confidently finished off very strongly saying, yeah, we are getting Q3, we are getting annual. It's happening. They're in the firing lines, baby. So on the bridge from the first half to the second half, gross margin. Any sense of how much the pricing element that you have spoken about on the call, how much of that accounts for that incremental gross margin step up? Now, again, quite a bit of text to go through here, but some very important stuff. So try, keep your brains focused, because I know this video is already getting a little bit long. But I think gross margin is going to be a combination of things that will improve the trajectory here. Everything from the price increases kicking in can't hurt, obviously. There is a lot of work we are doing with our CMs, and it's everything from what they charge us to do what they do, but they charge us to get a shift, and then, of course, what we are paying for parts. So again, remember what we're speaking about, guys, getting that gross margin up. So I think we will fundamentally improve incrementally there just by getting better in operations, which again is a great way to get better. I think you may have seen we hired Rick Wilmer, who was a gentleman, to join us and focus heavily, particularly on operations from the supply chain side of things. So again, one more man who's added to the headcount, who is going to hopefully make a considerable difference on this company's future. So we are very optimistic there. And then we have a very strong R&D team, one that they have built over 15 years and are still building, that does a nice job of doing things. We had, such as this one, we had an original power module. Now we have a new version of the power module, and it has a better, faster, cheaper, which of course you're not supposed to blow, but that's definitely what it is. So again, you know, the R&D team have built things from the ground up and made them better, faster, cheaper, which is exactly what you need. So the CEO thinks it's a combination of all those things is why we believe that the gross margin is headed back to where it needs to be, which is ultimately what all of us investors are waiting to see. And again, guys, they've had that gross margin up there before. Obviously, some secular tailwinds, or the opposite of secular tailwinds, brought it back down. It was a very bad Q1 fiscal year 23, 17%, the lowest we've seen in a considerable period of time, I believe 2 quarters prior to this even. But now we just want to get back up to these higher regions. So guys, that is the majority of what I took from this earnings report. And you can see why there is so much more value in the Q&A session than there is just from the press release, which is essentially the very first sheet that I laid out here. Yes, we need to read this, we need to understand it, we need to see where our beats are, where our losses are, we need to know what we expect over the next 1 to 2 quarters, ultimately full year guidance. But that Q&A session is where all of the juicy information is, and that's why I wanted to put it into this easier to, you know, consume format. I cut out a lot of the useless stuff, not useless stuff, but the boring stuff, the repetition, etc., etc. So hopefully you guys were able to take a little bit of something from that. We can see Chargepoint making a little bit of a pullback on the day, but still outperforming pretty much all of their peers. Now, just before we end this video off, guys, I will take a brief look at the chart. If you've been following, you'll know I've been speaking about this black line for a couple of weeks at this stage. And you can see that they respected that within a few cents. And that's where I was saying, if you had bought in, let's say you bought in right here on the black line, you chased it up to the top. That was a 20% move within 6 trading days. Even right now, you'd still be up 13.8% if you held all the way through. Now, I think this is going to become important for us, but you can also see up move, so new high, higher lows, hits it again. We came a little bit lower. Now again, we've created that higher high. Here is a higher low. I am hoping that this can continue. Ultimately, I'm hoping we can break out above 1762 and, you know, make our way back up to that $20-ish range. We have had no strength there for a long time. I mean, off the back of this sell-off, we went there, boom, huge sell-off. We went up above it again, boom, huge sell-off. Now we are up above this area. I'm hoping that we can get some strength above that 1750 mark. Even if it takes us a month to consolidate around here, but move our way up towards the high 19s, if not low 20s preferably, I would much rather see that happening. But we have broken this downtrend. We are above it now. Things are looking much better from a technical point of view. You can still see the respecting RSI. When they come up too high, they come back down. But you can see where we are right now. The RSI isn't high, even after that near 20% move. It is juicy. You can see volume coming in like crazy the last couple of days as well compared to our averages. So yeah, technicals are looking very good. Fundamentals are obviously looking fantastic. I mean, everything we just spoke about today is positive for the company. We are getting quite common updates from the company as a whole. I'm feeling very, very good about these guys. Now, does that mean that they can't just come crashing back down to the 10s? No. And if they did, would I be upset? No. I am more confident in this company than I have ever been, and I bought them 24th of January at like $11.50 a share. If they came down there now after that most recent earnings, yeah, I'd feel a lot more confident buying them now even than I did back then. So I won't be too upset. Do I think it's going to happen? If it does, I'll hope that it doesn't happen for a month or two so we can stay above this trend line, and hopefully we can make this a place that, you know, we can bounce off of maybe 1, maybe 2 more times maximum. And then hopefully we're going to be looking for, you know, something along these lines to come into effect, and we can start bouncing upwards on here and boom, make a nice actual upward trend. But I don't think this line, for the record guys, is in the picture just yet. It's nothing to take seriously, but it's one that, you know what, I'll leave it there, see where it is for the next Chargepoint video. But anyway guys, if you watched this video all the way till the end, let me tell you, you my friend are a true legend, because this was definitely a much longer than normal video. I really do appreciate you being here. I appreciate you guys waiting the extra day for me to get this video out, because again, I did want to make it a good one. If you did enjoy and you haven't yet, please hit that like button, subscribe to the channel if you're new around here, and drop me that comment down below. You would be a true legend in my eyes. Anyway guys, I hope you all have a beautiful, blessed day. I'm going to see you for another video very soon. Peace.